Hello, everyone, and welcome to the Buck Stops here. I'm Catherine Murray. Well, we have seen some nice improvement in earnings this week and also, of course, the market, really led by some of the tech stocks. And there was a lot of concern that they would be worse than feared, but the opposite has actually been true, and it's really helped the overall market as well as the overall sentiment. So I wanted to bring in somebody who I have talked about tech with for many, many years now, and that is Kim Forrest. She is the founder and CIO of Bokeh Capital. Kim, welcome. Thanks so much for being with us. We're going to talk about tech, but we're also going to talk about the broader market, but thanks for being here.
Right. Thank you for having me.
Kim, why don't we first start with the results that we've seen this week? I mean, it was the mega cap tech companies that has been in focus: Apple, Amazon, Microsoft, and Meta, or Facebook, just to name a few, and very different results. So how are you looking at some of the results? We do have to go through them one by one.
Sure. Overall, I think that tech and in general earnings have surprised to the upside against some pretty heavy headwinds. The first is we've had slow, if not negative, growth here in the US, and that was confirmed yesterday with the GDP numbers. But also, the really rising dollar and the level of the dollar caused Microsoft to pre-announce back in June. So that kind of cast a pall over all of the tech stocks as people wondered, would not only American and Canadians buy technology, but how about the rest of the world, because it's all priced in the dollar? And the answer has been, yeah, they did.
Hmm. And so when we look at the results, let's take Apple as an example. They just reported yesterday, and the numbers, the top line looked better than expected, but it seems as though that's driven by fewer supply constraints than expected by the company. Services were a little bit weaker versus expectations, but it seems as though the consumer demand for the iPhone is still very, very much intact. And if anything, this past quarter is somewhat of a nothing quarter, and we can almost look forward to a big ramp up back half of the year.
Right. And, they're a special case where we would like to think of them as everybody has an Apple, but guess what? The most affluent people in the world seem to gravitate towards Apple. And I think that's really demonstrated in these really great earnings for the company and mostly in shipments, because people around the world wanted to buy Apple products. They could get them and they got them. But I don't think that really captures the entire market for smartphones. And I think some of the Android companies are probably going to disappoint as consumers who are more affected by gas and food prices, like, just don't buy them in this quarter.
And so when we look at Apple, where do you stand in terms of owning the stock right now? Do you think that this is one that you can own for the next 5 to 10 years? I mean, that's a long time when it comes to tech, but at least the next 3 to 5 years. What's the story?
So the story is twofold. First of all, there is really an ecosystem. Once you buy into Apple, it seems as if you get further and further into Apple world, and Apple world is happy to take your money, right? So that's theme one, that it's really hard to leave that ecosystem. But the other thing is, I think there's areas around the world that are probably going to get wealthier in the next 10 to 15 years. And certainly the next 3 to 5 years is a runway for Apple. And those areas of the world, which have minuscule amounts of Apple customers right now, are probably going to grow. And I've been long kind of negative on Apple up until maybe 2019. And here's why. I thought that some other phone company, because it's essentially phones, right? Some other phone company was going to come along and take their lunch. But it looks like Apple has this ability to understand what customers want for their next phone, and they're able to deliver it. I am watching for that next company that can do that, but so far nobody's been able to do it better than Apple.
Okay. We're going to take a quick break. When we come back, I want to get your thoughts in terms of the developing world and the potential that has or is for Apple going forward. We'll be right back. All right, Kim, we've got a lot of tech stocks to go through, but I want to pick up on this one point that I heard from another television commentator this morning, which I thought was really interesting that when people sell their iPhones to third parties or perhaps back to telecom companies, that they are then sold to some of the developing nations. And that what that does is really create an entire new ecosystem or group of people that will buy into the Apple ecosystem. Do you agree with that? And how powerful is that for the long term growth of Apple?
I do believe in it. I mean, I think the Apple product is a great product, probably beating out anything that Android has. But it does whet the appetite. They're getting older technology, a couple of product cycles behind. But when those buyers start coming up the economic curve, it's certainly going to make them loyal to new iPhones. And that's going to be a real luxury hallmark for that nation that starts that.
Okay. I want to ask as well, in terms of the market and the tech stocks having pulled back so dramatically on a year to date basis, is the valuation right now for Apple attractive to step into?
Oh, I hate to buy whenever something's going up, but I would say, especially if you're for the long haul, maybe on a day where it's trading off, add some shares to your portfolio. It is a company that has a very long runway. They plan very long, and their services should be able to really keep people in that ecosystem.
Okay. Speaking of stocks going up today, Amazon's up by maybe 9, 10%. I'm not looking at it directly right now. But they had very strong numbers. Interestingly as well, the consumers seem to be strong for Amazon, less so obviously for Walmart, and that was a bit of an overhang for the broader market. But Amazon seems to have bucked the trend and even had tough comps. So where's your view right now on Amazon stock?
Well, I don't. I personally have not bought Amazon for any of my portfolios. They're a complicated picture. The delivery and their sales, the stuff that we know Amazon for, it's pretty low margin business and extremely volatile. And what is really or has really made the company interesting and a potential buy for me is their AWS product, which is essentially selling cloud services to businesses. So that had done really, really well in the quarter. They were very controlled in their expenditures too, so that's very, very good. But Amazon's just such, I don't know. Sometimes they do some crazy things like drone deliveries. They say they're going to roll that out. As somebody that loves economics, I don't really see the scale that drone deliveries are going to add. It seems like it's too complicated, and
Hmm.
yeah, it's just
Yeah,
not something that I like. So, yeah,
fair point. Interestingly, yeah, I was looking at their numbers this morning. 2.7% operating profit margin, not a high
right.
margin business,
Nope.
and yet billions of dollars in sales. Okay, so
Yeah.
all right, we got your call on Amazon. Let's move on because again, there's a lot to cover here.
Yep.
What's your latest view on Microsoft?
I think Microsoft is really well positioned for the future. I think that the dollar really affects it negatively, and I would watch for a falling dollar maybe to wait to buy it in back into Microsoft. A lot of their sales are to businesses outside of the U.S. and businesses buying, having to translate whatever currency they're in into the dollar are certainly getting less. And I would just be cautious on Microsoft. Although if you own it, I wouldn't touch it.
Okay. This is one though where I've read that there are some analysts on the street right now that think that their installed base can actually double,
And
actually
I
more
believe
more
it.
than that. Yeah.
I believe it. There are areas of the world that do not or are not business customers of Microsoft. And guess what? Word, Outlook, the whole certainly Excel make you more productive, and that's why businesses need to buy in. But again, they need that dollar to be a little softer than it is right now.
Yeah, it's amazing when we sit here in North America and think that or don't realize that not everybody has, Microsoft and has an installed base with them as of yet. We have to
Yeah.
remember that. But it does fit at about 26 times, 10.4 times booked price to book value. Not particularly cheap, but ROE is 42%. It's a pretty good numbers.
And and that is the fantastic part of Microsoft, money making machine.
All right, rounding out the tech earnings picture. And again, these are the large cap tech companies that really drive sentiment, they drive the market. I want to get your take, Kim, on Facebook or Meta. Disappointing results there, particularly, correct me if I'm wrong, on the ad front.
Right. Well, that's what they sell. I know if you're a user of Facebook or Instagram, you think that your experience is paramount, but what they're trying to do is make you stay on longer and see more ads. I mean, that's effectively what it is. So I think this really speaks to the diverse set of socioeconomic advertisers that are out there, that probably the people at the lower end of the spectrum aren't being ad buyers aren't buying ads on Facebook, and that is affecting them. So far, we've talked about Apple, which is a skews to the higher consumer. You've touched on Walmart, that skews to the lower socioeconomic consumer. And I think Facebook also has a lower socioeconomic footprint, and advertisers just aren't buying ads. And that's a problem for Facebook because that's the only way they get money.
What's the long-term outlook, though, in your opinion, for Facebook? I mean, is it a name that you can just hold and own, or do you trade it? Do you own it?
I do not own it. And it's just because there's only so many ad driven companies that I want to own, and this isn't one of them. I think it's probably here for the foreseeable future. But they've said they're going to invest a whole lot of money in the metaverse, and that scares me because I'm not sure people really do want to live in the metaverse. It's cool at first. I'm sure that there's a lot of people that would like to try it out, but I'm not sure investing the gobs and gobs of money that they would have to do to make a compelling offering is all that compelling to investors.
And speaking of ad-related companies, what's your view then on Google?
Well, Google really does serve advertisers because you can buy AdWords and very narrowly target people that are going to buy, as opposed to Facebook, where we're looking at our friends' kids' pictures or whatever we look at. So I think Google, of the two of them, is more of that long-term buy because it satisfies both ends of the users, right? The
Hmm.
people looking for whatever and the sellers of whatever they're looking for.
Kim, quickly here on the chip stocks. What I mean, you have to really understand how to invest and analyze chip stocks as you do in order to own them. In my opinion, they can be volatile. There's more and more interest in them from I think a wider group of investors because of the recognition that they go into everything that we do and have and own.
Right.
So, what's the take right now, though, on, well, Intel? Very disappointing. Is AMD winning that share?
I'm going to say maybe, but not really. What I think is going to happen whenever AMD, and we own both Intel and AMD, just to make this perfectly clear. I like both of them for the very long haul, but times like these are going to be distressing if you own them. And
Yeah.
what I think has happened in the last quarter is businesses that build out their cloud infrastructure haven't been doing that. And that affects both AMD and Intel. And I think that's what's going to be the story next week.
What do you think then of Nvidia?
I think NVIDIA is really dangerous because it's extremely expensive, but it was also the deliverer of Bitcoin mining. And that is a very dangerous area to be in. Not only do Bitcoin miners stop buying whenever Bitcoin drops, but they also decommission the servers that are out there calculating, doing the mining of Bitcoin, and then they sell those. as to other people. So they're creating a secondary market, which is going to
Mhm.
undercut NVIDIA's new chips. So it's very dangerous at this point.
It's so interesting. It was such a case for Nvidia, the fact that their chips were used in the mining of Bitcoin. So, but I guess the question though is, does the stock reflect that?
Well, we're going to see. I don't think people understand how much effect that Bitcoin has been having on that company.
Okay. All right. We will take a quick break. When we come back, I do want to get some of your top picks where you would place money today, just given some of the opportunities, because we have seen a lot of stocks pull back, and it might not be in tech. Maybe it's other areas. We'll be right back. All right, Kim, I do want to get a couple of your top ideas. I think investors or viewers always love to have that. So let's actually just start with the chip stocks because we were talking about them. Where is there an opportunity right now?
Well, if you have a stomach for volatility and you have a long timeline, I would take a look at Intel. And why is this? Well, they're a little bit behind the curve with respect to their foundry technology, but they're going to probably get a lot of money from the US government as part of our CHIPS Act. And then they are going to be able to build very new, very modern chips here in the US because they're going to build new fab plants. So that's a very long explanation of free money and coming back up the technology curve.
Okay. And that's certainly been a theme that we've seen really since COVID. So, buy America, be in America, et cetera. So we'll see that build out, you think? You think it'll actually
Right.
happen?
Yes, I do. I live in Pennsylvania, and Ohio is our next door neighbor, and I believe that Ohio is going to make it happen, even if the federal government doesn't come through. But I'm pretty sure the CHIPS Act is going to be signed.
Okay. Let's take a look at another stock. Coca-Cola seems so basic, but there's probably a lot of people that don't own it in their portfolio. Why do you?
Sure. Well, it's not the Coca-Cola of 10 years ago. First of all, and this is kind of crazy, but the company really effectively uses technology to be able to do its business better able to forecast how much product it needs, and just better internals about people talking to one another within the company. So that's my big takeaway. But the other thing is they've moved away from only offering fizzy drinks. They bought a coffee company that was based in England, and they're now adding alcohol to their menu. So they are selling alcohol based drinks in some of their regions. And I think that this is something that the company said they would never do, but it really does add to their product lineup. And I think it's good for the shareholder.
Hmm. Okay. Exxon is another name that you own. I, full disclosure, do own it myself. I love it. I bought it with like an 8 or 9% yield, so when nobody wanted it. Uh, they just reported good numbers, of course. But what's the take now? Can you actually put new money to work? It's had a nice run.
Well, I think that you can work into this name, maybe buy a half position, and then see where oil prices go. Now, Exxon is always going to trade with the price of oil. That's just what it is. But the other thing is, not only does the company get oil out of the ground and into your tank, but they have a lot of chemicals businesses, which at times can soften the blow of lower oil prices because the demand for gas or it's just an ameliorating effect on. It's not just gas for the cars. There's a lot of other products that the company makes.
Right. Kim, I just want to wrap it up here by asking you to kind of describe what you offer to clients. And I don't know if you can take Canadian clients, but I think Americans also follow me and see this. So,
Sure.
how do people get in touch with you, and what is it that you actually offer?
Sure. Well, you could look at our website, Bokeh, Bokeh, capitalpartners.com. And we do offer separately managed accounts for people that want separately managed accounts. And we have a sector neutral approach where we mirror the holdings in the concentrated US traded positions that we own, and it approximates the benchmark, which is the S&P 500. So on those odd years where oil or energy hits it big, you will at least have the weighting of energy in your portfolio. And the same thing for other sectors. It's hard to pick good stocks, but it's really hard to pick good stocks and know which is the hot sector for the year.
Right.
So let's
And
not do that.
right. In terms of concentrated portfolios, people don't always know what that means. So that might mean what, 30 names you own?
Exactly. As opposed to a lot of people have individual stock portfolios with 60, 100, 200 names in them. And we believe in more concentrated positions, about 3% per position. So that's about 33 stocks.
Right. And it's difficult to know 100 stocks very well. Some PMs do it
Yes.
because they think they're spreading out the risk. Maybe that's true. And then others like to really dig deep into the fundamentals and take a little bit bigger bets. We got to leave it there? Thank you so much.
Thank you.
All right. We'll see you soon. Thanks everybody for watching.